Hello and welcome to the last and final episode of Smart Money this calendar year. The last 1 year for the markets was phenomenal, so to speak, because the Nifty, while most global markets saw a fall of about 10 and 20%, the Nifty actually gained about 5-odd%. So in the global context, ours was the cleanest shirt in an otherwise dirty laundry basket. But how is 2023 going to shape up, and what should you do to protect your portfolio? What are the themes to look at? Gurmeet Chadha, Managing Partner and CIO of Complete Circle Consultants, is our guest on the show. And Gurmeet is going to help us with a couple of themes that you can look at to build your portfolio in 2023. Gurmeet, thanks so much for being a part of the show. Wish you a very happy New Year in advance, and greetings of the season to you. Tell us a little bit about what 2023 can look like, and from an investor standpoint, what should one do?
Thanks, Sonia. It's always a pleasure. I think it's been a good year considering, as you rightly mentioned, what 2022 has been globally. Global markets correcting, oil prices high, war, re-emergence now of COVID cases. So anything that could go wrong has gone wrong. I think you got to be more balanced in probably the first half of 2023, because I think we're still not done away with all the rate hikes. I think probably the peak would probably be reached in February, March in our sense. And that's till that time, I think you should be a little cautious in terms of deploying incremental liquidity, be more staggered. As I said earlier, the cost of not doing anything today is 7.5% in a government bond. So have a more balanced approach. And I think second half of the year, I think is where I believe the inflation numbers will start coming down. There are pockets where earnings growth would be pretty, reasonable. In fact, in some cases, 20% plus. And I think those are the spots, probably we'll discuss as we move ahead. In the show.
Okay, so without wasting any time, there are 4 or 5 themes that Gurmeet is going to talk about. So let's get straight to it. Gurmeet, tell us, what's the first theme on your list?
Yeah, so, I've always been accused of being favorable to banks because I'm an ex-banker, but I think this cycle is favorable despite a good 2022. I always discuss all-time favorites. So let's start with something which I've seen some turnaround this year is IDFC First Bank. So the efforts they've been putting over the last few years since the merger is finally now getting reflected in the price. So if you see, the retail book is now more than 2/3. Their CASA ratio when the merger happened was hardly 7%. It's now upwards of 50%. The infra book and the corporate book, which was 2022 3%, is now sub 5%. And the high cost borrowings, which were legacy borrowings, is being continuously replaced by CASA and retail term deposits. So last quarter alone, if you see, they replaced almost 2,000 crores of high cost borrowings. So I think they have a smart strategy in place in terms of getting a nice liability side franchise. Great digital stack abilities, which I think will scale up. And if you see, they have also a very nice mix of retail loans. So if you see last quarter, 40% growth in mortgage, working very well on the credit card side, rural finance they're focusing on. So it's a very good retail mix. And I think at just 1 lakh crore retail loan book, I think there is scope to probably grow. So this is one bank probably you will gradually see return on assets improve to 1.5-2%. They just have to be mindful of a couple of large corporate accounts, which I think could potentially create stress. But I think there is further re-rating due, I think, for IDFC First.
Okay, so that's the first theme and the first stock that we're looking at for 2023, IDFC First Bank. But you want to, sort of balance that out with something a bit more stable in the banking space, considering that you're a bit more conservative in nature.
Yeah, so I've been an investor and ex-employee of HDFC Bank for more than a decade. I think it's long overdue for some performance. I think the merger overhang should go. If you see the management commentary, they are actually running 2-3 months ahead of the merger deadline. I think it should happen probably in Q2, early Q2. And I think I've never seen HDFC Bank at 2.4, 2.5 book value. I think if you see last 20 years, it's called a 20% bank. They've grown profit 20% in 18 out of 20 years. They've never gone below 2% GNPA in last 20 years. Gold standard underwriting standards. If you see consistently, they've been growing. In fact, they've been now focusing on corporate and the commercial banking book in addition to, the retail book. And at 15 lakh crores to grow 20% with this credit underwriting, I think speaks volumes about the ability. So I think this technical overhang should go. And I think bank can probably regain some of the old multiples it used to enjoy. So that's one bank I think which is still reasonable, and I think there's a lot of synergies which will happen once the merger goes through, and there is some embedded value in subsidiaries also, which I think could add. In fact, my sense is when the merger goes through, there could be some near-term upside also in the bank.
Okay, so that's two stocks in the financial theme that you like, which is IDFC First Bank and HDFC Bank. Let's move on now, Gurmeet. What is theme number 2?
So I think this manufacturing push, Sonia, we've been discussing throughout the year. In fact, more than a year now, across industrials, across defense, across textiles, electronics. I think this continue will do well. I think the manufacturing landscape is changing. There is government policy push. There is PLI support. There is China Plus One. So everything is coming together. One thing which I like is actually a proxy play to manufacturing is industrial gases. So Linde India, after the integration with Praxair, will have 50% exposure to market share to industrial gases. Industrial gases are largely your nitrogen, oxygen, hydrogen, argon, etc., right? Which has end uses in metals, petrochemicals, glasses, textiles, everything. They have wide range of end uses. They are also into specialty gases, which are high purity ones like helium, etc., neon, and then they are into medical gases as well. And as manufacturing picks up, as we see, its contribution going up, India gaining share. I think this is one good way of playing it. Great return ratios, good governance track record, slightly on the expensive side still, despite 20-25% correction from 4,000 plus levels. So maybe a staggered approach here would probably be better. Maybe a one-quarter approach in terms of accumulating this.
Okay, so that's on Linde India. Interesting, a shift from your usual stock ideas. Anything else that you like within this space?
I think the old one for which I've been talking about you of this stock for a couple of years now. It's been almost a 4 or 5 bagger for us in the last 2 years. Is this defense play and solar industries? I think it's made an all-time high today. I was watching just before the show started. I think what I'm happy is despite this growth, we are projecting about 45% EPS growth for next 2-3 years. So industrial explosives continue to grow at 15-20% volume growth is what management is indicating. The defense in the overall revenue mix has a possibility to touch 20%. They have 30% kind of a market share in explosives, 70% in exports. And they are into fast moving and consumable defense goods where which has a very good impact on working capital and return ratios. They also have the exclusive technology transfers for Pinaka rocket and BrahMos propellant and couple of drone technologies. And there is a startup ecosystem they are playing through Skyroot and some of the others. So looks still good slope despite the up move there, Sonia.
The only problem with solar industries, as you said so yourself, it's been a 4-bagger, right? So one would think, am I getting in too late into the upcycle? What's your view there? I mean, do you think there are better opportunities in this sector, or do you think one should just stick with the winners?
No, there are a couple of more opportunities. I agree with you. As I said, if you can justify, as I said, a 50% EPS growth, I think the current valuation multiple can sustain. But if there is any disappointment, then of course there could be near term. But as I said, the defense part of the portfolio can actually surprise on the upside. It's currently just about 400-500 crores, and the potential is to probably do 1,000-1,500 crores, and that can have significant operating leverage. And their overseas businesses also now are getting streamlined, and they're getting into new geographies. And my sense is we probably see industrial revolution too, with the kind of supply bottlenecks and China Plus One playing out.
Okay, so there's this manufacturing theme, right? I mean, you spoke about a couple of the stocks here, whether it's solar industries. You also gave us a couple of banking names as well, IDFC, First Bank, HDFC Bank, and Linde India. So it's 4 stocks done. In this manufacturing theme, anything else you want to talk about?
Yeah, so another area which I think is textiles, which I think, and textiles is quite a fragmented area. There are knitted garments, there are apparel exports, and there are people who are vertically integrated. There are lifestyle brands. So my sense is that while one name which we like since 2018, once the turnaround happened, this has been Gokuldas Exports. Once the new management MD came in after the Blackstone exit, it's done very, very well. This year could be a slightly challenging as US slows down because 80% of the business comes from US. They have clients, marquee clients like H&M, Gap, etc. They almost do 36 million pieces. Last year they did almost $250 million. I think that the UK FTA could be a game changer as and when it happens. I think we're very close to that. that is where we have a slightly disadvantage, especially on apparel exports. Also, it's one of the beneficiary of one of the PLI schemes, and again this China Plus One playing out. Still reasonable on valuations. You could probably have a soft Q4 as the guidance given by the management due to headwinds in US. But as I said, this is more long term, and they're expanding. The capex which they are doing can probably add another 1,500 crores to the turnover.
Okay, and one of your favorite stocks in this space is Uno Minda. At what point do you say, you know what, this is it in terms of the rally? I mean, Minda has given great returns. This year has not been too good. It's sort of consolidated in 2022. But at what point do you exit good stocks, Gurmeet?
Yeah, so Sonia, as I said, that big wealth is made in waiting, right? And just keep adding, what you like over a long period of time, as long as earnings are supportive. And I think Minda has more legroom because if you see, so their market, so I call them automotive solutions provider, not just an auto ancillary. So they're clear leaders in which is non-EV portfolio, which is horns and switches and car seats, etc. Alloy wheels, now they're market leaders. Second, they are second largest in airbags, air filters, etc. Which airbags will become compulsory next year. And then they have this EV portfolio, which they are much ahead. So on smart plugs, on sensors, on battery management solutions, they're much ahead of the competition. And my sense is the hit value can actually become 3 to 4 times. So probably a good time to exit could be 2025 in my view, considering that we have seen significant consolidation. And I think I've not seen any company, they have 72 manufacturing facilities, some 17 JVs. I think the way they've been innovating and adding more content per car is quite amazing.
Okay, so these are the stocks that Gurmeet has spoken about. These are the big themes to watch. Remember, they are not outright recommendations. They are only themes and some stocks that you can look at. IDFC First Bank, there's HDFC Bank, there's Linde India, Solar Industries, Gokaldas Exports, and Uno Minda. We'll do one thing. We'll take a short commercial break. Some more stocks to go. Don't go anywhere. We'll be back in just a bit with Gurmeet Chadha. Welcome back to Smart Money on CNBC TV18. It's the last and final Smart Money of the year. Thank you for sticking around this entire year and hope you have a great 2023 filled with health, wealth, happiness and everything in between. Gurmeet Chadha of Complete Circle Consultants has been speaking to us to fulfill one of those wishes, which is wealth and how to create that. So before the break, of course, we spoke about a lot of stocks and let me just revisit them for you. IDFC First Bank, HDFC Bank, Linde India, Solar Industries, Gokaldas Exports and Uno Minda. But let's move forward now. Gurmeet, what is theme number 3?
There's been a little out of favor theme. It was a darling in 2021. I call this digital, and and not just IT. And within digital, I like ERD because I think that's something which is transformational. So it's a tale of two different. So one of the picks has done very well, and one of the pick has actually, after doing well, corrected 40-50%. So let's start with one which has corrected, which is Tata Elxsi. So if you see our ERD, which is engineering, research and design, if you see NASSCOM predictions, India's share is likely to become about $65 billion. That's almost like 2x of what it was in 2020. While a lot of people think that ERD is more discretionary, I personally think that anything which is more transformative can be deferred, can't be discretionary. So there was so last quarter is when I think the stock started correcting, because after 7 quarters of 7% CC growth, the growth came down sub 5%, and the margin first time came down below 30%. And there was some slowdown in media and transportation, which is related more to OTT and others. And even the core segment, which is embedded product design, which is to autos and etc., saw some aberration at 3-4% CC growth. But I honestly think that this story is more structural and more long term. Also, some of the cost headwinds like on-site costs going up, travel costs going up, more freshers taking time to get billable, I think will probably play out over the next 1-2 quarters. The stock has corrected probably more than 40%. Still is slightly more premium vis-a-vis others. That's something, if you want to hold something for, let's say, 4, 5, 6 years, I think this is a great story to play. The second one within this space is KPIT Technology, which has actually done very well. They've raised guidance to almost 23%, did an acquisition, continues to add more brands. They just added Renault last month. The stock did made a new high despite headwinds around the ARD space, and it only specializes in giving digital solutions, embedded softwares to OEMs. So of top 15 OEMs in the world, 10 are KPIT's client, and it works very closely with them, in terms of, and as I said, the margin guidance has also been raised up.
But, with these IT stocks, right, Tata Elxsi, KPIT Technology, the only problem is, A, these stocks have corrected quite a bit and the overall mood in the IT space is a bit somber. I know that's the best time to buy when the market is fearful. I get that. But these are also well-discovered names, right? The stories are well-discovered. So do you think there's still a lot of alpha to be generated here?
No, I think so. Sonia, as I said that, only when the news is not good is when the prices are better. So as I said, 2021, nobody was touching banks. Banks were the way underperformer in 2021. 2020, it was pharma and specialty chemicals. Nobody wants to touch it now. So you got to start getting into when news is bad and there is pessimism, and then gradually build around it. That's the way you generate alpha. And sometimes we focus too much on the name. We don't focus too much on the sizing of the name, right? If you don't buy it enough, it doesn't really move the needle.
All right, and you like the largest one in this space as well, Infosys. So is that your buy on dips pick? Because Infosys has had a really rough ride this year, but you still have high conviction there?
Actually, 40th year running. I mean, what a wealth creator it has been, right? I don't need to talk much. If you look at last quarter, just one figure I give you, the cloud revenue for Infosys crossed $1 billion, led by their Cobalt and cloud-led capabilities. So I think this lot of this cloud transformation demand is multi-year. We were a $1 billion industry in 1999. Today we are upwards of $200 billion. Our IT services would be $500 billion by the time we end the decade. Returns 80% of the capital has, as I said, corrected a little bit. So this one probably could be the steady one in the portfolio, which can probably compound at maybe 15%.
Okay, that's the IT space, and perhaps the time to buy is when times are tough, and that's the theme that Gurmeet is looking at. All right, let's move to the next theme, Gurmeet. What is it?
So there's one, Apollo Hospital. So I wanted to pick something from pharma. I chose the hospital space because we have covered CDMO multiple times. So I think that's something which it's the hospital. It's a pan-India presence now. The occupancy rates, which we called, average revenue per occupied bed, that's the metric hospital use that continues to pick up. The case mix is better. The share of surgeries, the complex surgeries has gone up. They've been investing now in the other segments, which are, I think, very good growth drivers, which is pharmacy, doctor consultation, diagnostics, etc. And they are now complementing digital with physical. So they've already added 450 stores in H1. In Apollo Pharmacy, they want to add another maybe 350 more. So take it about 800. And that 24/7 digital platform has some near-term headwinds, but I think that's something which will be the future. So it's multiple play on, as I said, the digital ecosystem around healthcare, the hospital segment, and the fact that the penetration levels are too low right now. So that's something I like more. And the last one is a telecom name, because for the first time after maybe 10 years, Bharti Airtel, in my view, is now reaching a stage where they can generate free cash flows, which can start deleveraging the name. In fact, they have just done tariff hikes in 2 circles. They've withdrawn the 100 rupee minimum recharge and trying to test that if the minimum one is now 155. If that follows through, you could see the ARPUs inching up. It's already gone up to 190. The African business is doing very well. The home and the enterprise business is doing pretty well. And it's a complete, as I said, digital ecosystem play. And now they're also planning to, monetize the Airtel Payments Bank. This is technically the first payment unicorn, which is a profitable one, which can, give them the necessary growth capital as well.
Okay, so that's a lot of themes. We've run out of time, but not out of ideas, right? So let's do one thing. In case any of our viewers missed out on the stocks and the themes that Gurmeet has picked out, we are going to get it up for you here on the wall, and you can perhaps take a snapshot of this. This is Complete Circle Consultants' view. These are the top ideas for 2023. We start off with financials, IDFC First Bank, HDFC Bank, followed by the manufacturing sector, which is their big theme this year. Linde India, Gokuldas Exports, there's Uno Minda, as well as solar industries. Then a theme that they really like is technology. So there's KPIT Tech, Infosys and Tata Elxsi. And let's wrap that up with Apollo Hospitals in the health space. They also like Bharti, which is the telecom space that they've been, sort of following and investing in for a long time. So those are some high conviction ideas that Gurmeet Chadha has put together for us, and hope this helps you create a strong and consistently growing portfolio for yourself. Gurmeet, thanks a lot for joining in once again. Have a great 2023. Until we speak again, you folks stay safe and keep watching CNBC TV 18.